What is up, and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be talking about Bitcoin as well as a number of macro charts and indicators. Let's start off with fear and greed. And as you can see, we are still in extreme fear territory. But what I do like that I'm seeing right here is that we are making a series of higher lows, higher highs out of fear. Now, do keep in mind, this does not mean that Bitcoin has necessarily bottomed right now. We could be in extreme fear and neutrality for a month or so. We want to see us escaping neutrality towards that greed side. But what this does show you is that the fear, the selling, has hit this sort of peak. We could go lower. Sometimes this is a leading indicator. However, I'll point out that the times we've had extreme fear for this cycle, you can see that was in June of 22, right before the cycle bottom, August of 24, the yen carry trade, February tariff scare 1.0, and of course, right now showing you that on the Bitcoin chart. Here were the times that we had extreme fear. Some were right near the bottom or about to the bottom, and so that being said, once again, we want to be looking for opportunities, especially if you believe that Bitcoin has not topped yet for this cycle. Now, something that I think it's important for us to take a look at is what was the November returns. As far as the seasonality, the almanac data, if you will, November's returns were so bad. I don't know if you guys remember, but before November started, Bitcoin, it was already the flattest year we've ever had. It was something like a 20% return. And now it is literally flat. We are about 0.25% up on average. So Bitcoin has just been chopping. You can call it maybe accumulation if you want to be glass half full. But we are right at 0%. Now, what's interesting to me is when you take a look at the last number of times Bitcoin has had this bad of a return for November, which is typically one of our better months, it was the literal bottom of this cycle in 2022 and then in 2018, 2019. So showing you that on the charts, as far as November 22, that was right there. That was the literal bottom this cycle. And then in 2018, that was also the literal bottom, and 2019 right here. And the 2019 comparison I find to be quite striking, because if you've been a subscriber of this channel, you know there have been a lot of comparisons coming through with 2019 as far as where the Bitcoin dominance chart is right now. We can go to November of 2019. Right here, you can see it made that initial peak. The same with Bitcoin dominance right now. It is not showing that it's bottomed out by any stretch. And also the United States Central Bank balance sheet. When the Fed started switching over from quantitative tightening to quantitative easing, that was right here in late 2019. So we might still have a little bit further down to go if you want to make that sort of a one-to-one comparison. But the Fed has said they're turning on the money printers, and it's possible we might be seeing stimulus checks coming next year. There's a lot of inflationary factors right now and on the horizon, which I think are going to be positive catalysts for Bitcoin. Now, something I'll be talking about on this channel quite a bit is the path to alt season. And this is another reason why I'm comparing this more to 2019 than end of cycle behavior. And that is because on our path to alt season, what we typically see when Bitcoin tops out, it becomes too expensive to buy, and there's this rotation into Ethereum large caps and some of your mid caps and small caps. Now, so far, we've been in phase 2, and these things can run together, but we haven't seen that end of cycle behavior where Bitcoin is so expensive that we really aren't seeing any rotation at all into our large caps yet. Remember, that alt season that people ask about, it lasts for about a month, and we've had 2 of those occurrences within the last, 8 years? So they are pretty rare as far as when they come, albeit the path that we're on right now would say we are still on our way. And so once again, referencing Bitcoin dominance, we have seen Bitcoin dominance going down, and this isn't end of cycle type behavior, at least not yet. And so another comparison I think is important to realize is, listen, I know it's easy to be disheartened when we get these massive pullbacks like this 36% pullback that we've recently had in Bitcoin. Let's measure that out. Make sure our data is accurate. I believe it's about 36%. There you go. I know it's not easy sitting through these, but again, these are the times to look for opportunities. So if your hypothesis or your thesis for your crypto assets that you buy and hold has not changed, then this is a buy the dip opportunity. So these are times where I think we are tested. Our strategies are tested. Are you going to buy the low, or do you believe that the cycle's over and you're going to let emotion change your mind? So remember, here, I like to challenge you guys to be good market psychologists, and whatever plan or strategy you have, make sure it's solid and make sure you stick to it so you can benefit from it later on. Now, I wanted to add in a couple other charts to kind of share my outlook on this cycle, and I think this one's pretty good. This shows the overall returns each cycle between the halvings. So since the recent halving, this has been Bitcoin in orange. You guys know that it's been overall relatively flat. Last cycle, it's in the purple, and you can see we had those three tops, the two tops here. This was alt season, which happened earlier on, and then we had that classic 4-year cycle top that people believe in, and the top, which happened right before the halving in March of 24. Things ran pretty hot. 2017 is back here, and then, of course, this one, I think that was like 2013 or so. But one of the things I've been talking about is that with log regression from bottom to top, and the halving doesn't coincide perfectly with the bottom, but we get this stretch. You see that 2013, 2017, I am looking for more of a stretch for Bitcoin tops to come later on. So let's go over to the rainbow chart. The rainbow chart shows that Bitcoin's price action moves within a log regression. We can all agree on that. The thing that where people start to disagree is there are some people who are 4-year cycle purists. They say, well, there's a top in December 2013, 4 years later, top December 2017, 3 years, 11 months, top in November 21. There we go. And then 3 years, 11 months, there was just a top again. All right. Very convenient. However, bottom to top, that is not what we've seen. And even the first couple tops, that was about 2.5 years. So bottom to top, when you measure each cycle, bottom to top, we get stretched over time. And that's what log regression shows. The x-axis, which is time, gets stretched. And the y-axis, that is our log scale, which is what shows us our factors of 10, where Bitcoin price is going. Now, currently, Bitcoin, it is in that about that teal zone area, which is at about 69K to 90K. That's 69K. Believe it or not, that's about where the 200-week moving average is. We'll show that more in the charts. Another thing I wanted to keep or start to show in these videos is the liquidation heat map. This has become more and more relevant this last year, especially with Wall Street or ETFs being part of crypto. And so where people are putting in their longs, their shorts, where they're adding leverage, this heat map shows where some of that is. So you see some levels down here in the low 80K area, and important levels to get above would be there at 95. We'll see where that matches up on the crypto charts. As far as alt season, we are still low, but we are making higher lows, higher highs there. And I do talk about other crypto assets, Bitcoin mining stocks, and altcoins. Leave a comment if you'd like for me to do a YouTube short on one of your favorite altcoins. Anyways, let's get over to Bitcoin. And, Bitcoin, it's been pretty detached to the downside from the moving averages. Now, what you can see is that we had a little bit of a rally, and then we got rejected by that 20-day moving average. Now, what is nice to see here is that we do have these long wicks, which do show buy support, and we have this Fibonacci line here. That is our 1.236 Fib extension. We had support there before, and we have the Fib extension line, as well as the 100-week moving average right now. So you can see the weekly candle bodies holding support on the 100-week moving average. This is something I talked about when we've hit these moving averages before. We tend to retest them about a month or so later. So inside of a month, we are still testing out that downside or, these support levels. And again, that 200-week moving average. Remember what I said about that teal zone, 68K? Well, look right here. The former all-time high. This would be max pain, in my opinion, if Bitcoin got here. I think this would be an absolute can't miss opportunity. And I'll just show you why. You can see that Bitcoin in the past, look at where the 200-week moving average is and how often price is down there. Even the 100-week to the 200-week. We can look at the light blue and the dark blue, and we can see overall, even as far as medium to long term, these are good times to buy. They're hard times to buy because there's extreme fear and the news is bad, but these are overall good times to buy. Now, you do see that yellow box there. To me, this is the zone that we would have to break through to resume bullishness, and a couple reasons why. We have our bull market support band, which is right at that zone. We have this former high here, and if we get to this high and the bull market support band and this 1618, there's other Fibonacci levels here as well. I think if we go to this low right here, I believe that would be a 618 retrace. Yeah, if we go low to high, we would be getting to that 382. So that's another level, but inverse of 382, that's 618, as you know. Anyways, we would make a head and shoulders. We'd run into the bull market support band, net fib, everything. And so getting above this level, I'm going to put this zone at about 100 to 106K, I think will be very important. I'm curious on the heat map. Yeah, you can see right there, the heat map shows 108K. So if we got through all those leverage shorts right there, then Bitcoin could truly run. But if we take a look at Bitcoin underneath a couple other indicators, such as the RSI and the MACD, as far as are we bottoming out right now, you can see Bitcoin has not been this oversold since the literal bottom right here. Again, 2020, that was COVID, and 2018. So, you know, even 2019, like we talked about on the seasonality chart, you know, as far as those comparisons, we're even more oversold than that. So do keep that in mind. And as far as the MACD goes, the moving average convergence divergence, this shows that we are still bottoming out. We haven't shown a reversal to the upside. We don't have those light red boxes. We don't have anything flipping up here as well. There was something I wanted to talk about with the RSI. Let's go back to that real quick. The RSI, this is on the weekly. Something to even look for is when the RSI flips above that yellow line moving average. You can see that's when we have some of these moves up. They can be fake outs, of course, as we see right there. But when the RSI has been this bottomed out, I look for it to get above, you know, show some of that bullish divergence. And you can see we're pretty detached right now from that RSI moving average. So we have to be patient. I think over the course of this next month, we'll see if Bitcoin can do a nice bounce here, break through that 20-day moving average and retain support at this 1236. Or if we keep testing that 20, we might get squeezed to this area before possibly going lower. Now, I've been making a lot of comparisons about 2019, and one of the reasons is Bitcoin dominance. You can see Bitcoin dominance is bearish right now. So we are underneath the 50-week moving average. We are chopping around between the 50 and the 100-week, and Bitcoin dominance has made a higher low here. However, taking a look at the MACD once again, we can see that overall this is a negative trend, and I do like that the momentum is on the negative side. So even if we get any positive movement in Bitcoin dominance, that overall the momentum is to the downside, which can hopefully draw it down even further. Now going over to some of our other crypto charts, this is total 3. Finding support once again overall at that 100-week moving average and the 786. Look for that to hold. If not, then you would probably see that 200-week and the 618. We'd have a golden pocket right in here. That 618. If we saw total 3 get down here, that would probably be a can't miss area for altcoins. Ethereum, Bitcoin still going up overall. Now, right now it is testing resistance at the 50-week and the 382. So we might see this come down a little bit further before, excuse me, before moving to the upside. As far as our large cap indicator, this is all our large cap cryptos that are within the top 10, XRP, Cardano, Tron, all of those, Solana. This one has flipped negative, so we might even see these come down a little bit more. I hate to say this, but we might see more downside before things recover. As far as others, Bitcoin, finding support right now on the 382, but if that gets lost, that would not be good for altcoins. And as far as tether dominance, tether is it has a value of $1. So whenever crypto is more risky or going towards the downside, increased volatility, people convert their crypto to tether to retain their Satoshi value. So right now, 6.5% of all money in crypto is in tether, and it is testing that 0.5. And you can see tether dominance has made clear support of that 382. So if we are to see any moves positive for Bitcoin, we would be seeing tether dominance come in the downward direction. This is an inverse relationship with Bitcoin. So as far as overall what we are seeing from the markets, there could still be some liquidations to the downside as far as the low 80K area. What we want to see, again, as I've talked about with the charts and the indicators, we want to see this support hold as the RSI and the MACD starts to flip to the upside. So this is area number 1 to hold between 81 and roughly 85K. If that were to break, then we are taking a look at that high 60 to 70K area. And to me, anything even below the 100-week moving average, as much as it sucks, would be can't miss territory. Let me know what you think in the comments below. I know it's tough out there, but these are times I'm looking for deals and opportunities with some of the best crypto assets. But we do need to see confirmation, because if you buy at levels before we have confirmation, it is possible you could catch a falling knife. But that doesn't mean that we still can't find deals on some of our favorite altcoins if you are playing the long game, or even some Bitcoin mining stocks. Anyways, let me know what you think in the comments below. Hope you are all doing well, that you had a fantastic Thanksgiving. Thankful for all of you. And hopefully we can get some great deals on crypto during this time and in the near future. So our patience and our strategies will be rewarded later on. Thank you so much for watching. Have a wonderful day. Take care.